Hey guys, hello. I'm going to start a little bit earlier since we're all here, nice and early. Just get the show on the road, and then by 2:30 on my side, the time is. Then everyone will probably start pulling in and start joining us for the live show. How are you guys doing? How's it going? I see there's a couple of comments here. Oh, sorry, I wasn't here sitting at the computer. Right. So, hi guys, welcome to the show. We're going to do the live show again as usual, the Thursday live show. Don't forget the risks associated with stocks, guys. Most traders lose money. If you don't like losing money and you don't like risk, you know what the story is. Probably shouldn't be trading. So how are you guys doing? How's your trades doing? Had a couple of questions. And there was one question about how to take the size of the trade and work out your stop loss on C-Trader. I did answer that in the members video this morning. I will go over it again a bit later, just so that everybody gets a good idea of what that's about, and also how you can do it on another platform as well. I use MetaTrader for my cash trading, and it's very difficult to do this, working out your stop loss and that sort of thing. So, you know, you get some tools on the MQL5 community that you can download for free as well, but you have to load them onto every chart. It can be quite a pain. So there is another tool that you can use with MyFX as well, but that's only if you're doing FX trading. But most programs or most trading platforms will have this thing on the side, this little goodie where you can basically work out from the bottom up what your stop loss will be, what your profit will be on any given trade, and what your, you know, you can see for yourself what your risk to reward is. Some, like TradingView, will actually tell you what your risk to reward is. Morning, Eugene. Morning, Lincoln. It's good to see you guys. Fantastic to have you back. But like I say, I'm doing, if people have got questions, please feel free to ask them in the comments, and I'll try and get back to you, if not with a video, at least with some kind of a post or comment. But most of the time, especially for the members, I will answer, particularly in the members video in the morning. And also for the guys that come on the live show, if you've got questions, we'll answer them. I will try and put a video together as well, which answers a bunch of questions at some stage. Maybe I should do that on the weekends or something, with a rundown on the weekly charts and have a look at the weekly, you know, what's coming ahead of the week and that sort of thing. But I won't do that live. I'll maybe do a weekend video for you guys and put it out there. But I noticed that the weekend videos are not as popular as the during the week videos. Just we'll see how that goes. See if we can put it out there. Right. Okay, let's just see. Get some viewers on board, and then we can start talking about absolutely everything. As I say, so yeah, in the future we will have a thing where I'll do a rundown on all the comments, and we'll also do a rundown on the markets. New Zealand dollar, Japanese yen, yes, so will we have a look at that? Let's see if we've got it here. I don't have it on my watch list. Goodness me. Maybe I'm confusing it with Aussie dollar or something. Okay, I'll put it on the watch list. Rob watch. There we go. Let's have a look at it. And just take it out of there. Let's just go back to the watch lists. Okay, so hello, Henry. Good morning from Paraguay. Yeah, welcome, man. Okay, so you say New Zealand dollar, Japanese yen, thoughts. Let's have a look at it. Let's see what we got. First thing we want to do is see what it's doing on the weekly, and on the weekly it looks like it is correcting. On the daily, strong support down here, lad. Strong support. Okay, we're looking at support here. And actually, let me just delete that. I just want to take it back a little bit, just see what else we've got here. Okay, so on this one, I'll call this rather a double bottom than a you don't have to draw a rectangle for everything, guys. And I'm just looking at that, and it looks more like a straight line double bottom on that particular trade. And then, of course, to add to that, you've got a nice trend coming through here. Let's just make them all yellow so we know what they are. Descending triangle here. Right, let's take it back to the 4 hour. On the 4 hour, take it back to the candles. Let's see what kind of thoughts we've got. So what you got here, don't worry about the candles that protrude through this, because those are just highs and lows. Like I say to you, we look at the closing prices on the line chart and on the day chart at that. So what we've got is this descending resistance, and we've got a strong double bottom along the bottom here. Your risk to reward is poor on a short. It's probably better on the long side. I would wait for it to get down to this support, give me a triple bottom, maybe give me a green candle to the upside, giving me a long trade. Other than that, it breaks through here, closes below this, and starts heading to the downside, and then you've got a short. But that's about it for New Zealand dollar, Japanese yen. There's not much else going on there, apart from you do have on the 4 hour an area of supply just up here. So if it bounces up and takes that money, comes down again, you might get a good short out of that if it gets all the way back up to here. But it's got to get all the way back up to here for it to do that. So, but there is an area supply of money up here. If you're looking for that, that is available. That's if you want to add it into your trading. But other than that, it's very, very close to this major support at the bottom here, which is a double bottom, which could easily become a triple bottom, which means a short would be a very, very small reward for a big risk. I'd rather look for it to come back up into this supply, give me another short down, or wait for a long off of this, a bounce, or breakthrough. Okay. Hey, Andrew, welcome. Good to see you again. US and gas hit high, hoping it will crash. Here's hoping. Here's hoping. Hi, Coral. Bit of a risky trade for me today. UK 100 sell. Did you go UK 100 sell? Gosh. It looks like it's working out for you if you're already in the trade. And I can see you looking at this. It's a nasty looking head and shoulders, but it's there actually. It does exist. So if it breaks below this, you might be in the pound seats. Excuse the pun, pound seats. You know, UK 100 pound and all that. Yeah. So the US 500 is giving me a headache. Now the Euro US dollar is giving me a headache as well. Most of these trades are not exactly going according to plan right now. I suppose it's the time of the day. Okay. What's the news at the moment today? It's Thursday, isn't it? There's probably jobs info today, isn't it? Where's my news stuff here? Chinese inverted rate. Calendar, there we go. Consumer confidence, retail sales, public sector, retail sales. Show more. What else have you got? Oh, it's all about the UK 100. Okay, let me just have a look at the US 500. Calendar, Fed's Goolsby speech, initial jobless claims, continuous jobless claims. That's probably going to affect the markets. Okay, there you go. Usual story. Usual stuff. Okay. Okay, so UK 100, short trade. Interesting trade, Coral. Very interesting trade. Very interesting trade. Everybody is actually calling doom and gloom on the markets, US 500 in particular. But as you can see, I went long on the US 500. I'm looking at it breaking to the upside, but that could be wrong. You never know. Just looking at this euro, you know, the FTSE is in a range, and it has gone to an all-time high. Would I go short on it right now? Let me just check for you what I would think of it. Just out of interest, you know, don't want to. You might be a bit early on the short, you know. That's a possibility, but yeah. Let's just see here. And then let's have a look at the weekly. The weekly is quite bullish. Well, let's see what happens with that head and shoulders, because it does look a little bit early for the short. You know, there's quite a distance to this. If we take it on the 4 hour, might be a bit closer, but it's still above. You might have gotten a bit too early, but let's see. Let's see how we go. Normally it has to break past the shoulder as well for it to be a reasonable trade. But okay, everyone, the market's 50-50. Let's see what happens. Euro US dollar, Euro GBP still goes well. The Euro US dollar, we've got the Euro US dollar as a buy. We bought into it. At the moment, we're in break even. So, you know, it's very dependent which way it goes. But you see, the way I looked at the Euro US dollar earlier is it's breaking to the upside. It's broken through that short-term resistance. But I also look at things like the Great British Pound US dollar, which is kind of looking rather bullish. So, you know, they kind of trade together. So while we might get a little bit of retraction here and back up, it doesn't look too bad, that trade. So yeah, we'll keep that going. And then the US 500 I took because it's above the resistance. So it looked like it's, well, hopefully going to do a continuation. But a lot of people are calling it, calling doom and gloom. So let's see. But that's why we have a stop loss, guys. We have a stop loss in here. And I've put it in at 6,000 stop loss. That's a $250 stop loss because it's a 25 grand account. If we lose it, then we took the wrong trade. If it goes the right way, only for us, that will be great. Yeah, but you know, I can understand the supermarket mentality. Everybody in the market saying, oh, the markets are so high and they're so strong at the moment and so expensive. I get that. They can get more expensive. Nothing wrong. I saw somebody calling gold way up. I tell you what, gold, I don't know. I see it is coming close to the 3,000, but people are calling like insane figures. We'll have to see what happens with that. Anyway, so I thought of moving the show a little bit later on the Tuesday, because on the Tuesday we start at 10 GMT plus 2. I actually did move it from 9 to 10. I'm thinking of now, I was going to move it to 12, but I'm thinking of moving it to 11 on this side, 11 GMT plus 2, just to see if more people can get involved and if it sort of suits more people better. Because I'm trying to pick up guys that are struggling in the evening as well, so complicated. But the Thursday one, this one is always going to be at this time because this one seems to be quite cool. How high can gold go? Yeah, Kevin, how long's a string? Yeah. I saw people calling some insane amounts like, you know, 7,000, 8,000, stuff like that. We were only at 3,000, guys, and it took us, what, 50 years to get there? I don't know. Yeah, no. I had a guy commenting the other day about the stock market, saying, yeah, telling me how it's all computerized, fractal, and what, you know, my feeling on it. It's subjective and it's people, human beings behind the market. And I just find it interesting that I asked the question, what did you do before computers? How did the markets work before computers? All I got was the market's a very efficient thing, and it's still, you know, as far as they're concerned, it's maths and fractal and all the rest of it. And it is an efficient thing. The market's one of the most efficient things ever invented. And in fact, it was invented by a Scotsman many years ago. I can't give you the exact date because I'd probably be lying to you on the date. And pretty much invented today's economy. I just wish people could see behind the lines. And it's probably because most people didn't get into trading before computers came about. So they didn't understand that you were buying and selling from other traders and on pieces of paper. So it's not a fractal algorithm. Even if it's a bot that's running on the system, there's a human being behind that bot that's making it work for them and buying and selling. They've got a reason for it running for them, and they've programmed it in a certain way so that it buys and sells according to their requirements. So there's still a human being that's buying and selling. It's all about human beings, guys, that are buying and selling and looking to make a profit in the market. Can you imagine if the market was just a robot and it had the same knowledge? Do you think it'll ever make you a profit? Because the market's, as you say, an efficient thing. So now, if all the robots had the same knowledge and they all traded the same way, how on earth are you going to make a profit? Because they're all just going to trade the same, and then it's going to be zero, isn't it? I just, I try to explain it the best way I can, and I understand how people are thinking, because what you see, everything is so computerized these days and so mathematical and whatnot, and you do need to know maths. I mean, you do need to be able to add and subtract and calculate and what have you, obviously. I mean, it goes without saying. And obviously these systems that we use have some kind of mathematical equation to them at the end of the day, because the system is a high probability trade and you're looking for high probability in charts, and it's all, geometrical and maths and all that sort of stuff. So clearly, I get that point. I do get that point. But what you have to look behind that. You have to look behind that to understand the strategy, to understand how you're making the money and what those red candles and green candles actually mean to a person at the end of the day. It's a whole bunch of traders selling. It's like if you look at the depth of market. When you look at depth of market, I actually had my MT5 on earlier, and my depth of market is the whole screen full. It's not a small thing like this. And I was looking at that. Every single one of those numbers with the number next to it is a trader with an order in the market. How many traders do you think there are in the market? There's not one or two. Millions. There's so many people out there trading. So yeah, it just, if you get out from behind the computer, like Lincoln's saying, if you get out from behind the computer, if you get out from behind the screen and you go and have a look at the real world and see a different picture, it suddenly changes everything. For example, if I invest in a South African stock, even an American stock, if it's a company that I know, if I walk around out there and I see things happening and I see this company is doing well and I see it's like improving and they're fixing the places up and they're opening new stores everywhere and this business is growing, you know what I do? I go back to the computer and I look at the figures on the company and I look at the information and I think to myself, perhaps I should have this in my investment portfolio. Perhaps this is a company I should look at. That's how I get to my investments 8 times out of 10. By seeing what's happening out there in the real world. I see it happening. I see things going on. Even when I invested in NVIDIA, do you think I just did that by looking at a computer screen and a chart? No ways. No ways. I looked at the NVIDIA came along and they started with all this AI and all this stuff going on. It said to me, Rob, you got to go and have a look at this. You got to go and have a look at this company. They're going to become something, and look at them now. Look at what's going on. I don't get it when people just look at charts and that's all they see and they just sit behind the computer screen. You've got to get out there and you've got to see the real world for what it is. There's real people trading out there. It's not just numbers and time frames and things like that. There's real stuff going on. This is why most people fail on 5-minute time frames, is because they're only seeing it as fractal. In fact, fractal, I can't even say the word. They're only seeing it as fractal, and they're trading on those 5-minute time frames. And I mean, the sample size is so small on a 5-minute time frame. You don't have a decent amount of information on it. That's the thing. I know gold is not very nor asset for investment. I did buy for 2448, so I'm happy. Or may go higher. That's good. Same as people telling you a bot or can trade for you 100% of the time. It's bull. Yeah, Kevin, a bot, people don't understand that a bot that trades for you is invented by people. That's where it goes wrong. That's clearly where it goes wrong, because that bot is programmed by someone who's invented a system like me. I've got my system, and then I take all my numbers and I put it into a bot and say, trade like that. The trouble with a bot is it can't see someone standing up and saying, we're changing X, Y, and Z in the economy. It can't see that. It can only see the charts, it can only see the numbers, and it can only see maths. So it can only trade on the information that it's got. It doesn't have gut feel. It doesn't have information floating around. So when something spikes, those bots get hurt. Yeah. Bots can't trade for you. How can they trade for you? Some people run good bot programs and they make money from it and it does well. Great. But when there's a crash, whatever, I suppose if you've got a proper strategy with it and proper stop loss systems in place, but you don't know who you're getting the bot from. How successful is it really? You know, and like I say, they don't have any gut feel. Coffee again, Captain. See. Coral, gold is the reason gold is classed as a poor asset for investment. And believe me, Carl, I've been doing this for 30 years, so I kind of know this. If you'd invested in the S&P 500 20 years ago, 30 years ago, and you invested in gold 20, 30 years ago, you would be 100 times better off with the S&P 500 than you would be with gold. One of the main reasons for that is gold, like every other commodity in the world, is cyclical. Now, cyclical means it's up and down like a sine wave. It goes up and down. And it never really climbs. Now, recently, in recent times, which is very unusual for gold, let me tell you, we used to have a guy in South Africa who used to be on TV, called himself, what's his name? Clive Roffey. Cool guy. Every time I saw him, he was like, gold, gold, buy gold, buy gold, buy gold, buy gold. That was all he would do, was talk about gold. But for so many years, and we always used to joke and say, you know, one day this guy's going to be right. One day he's going to be right. And, well, now's that day. now he's right. But look, you know, the last year or two, it's done well. It's climbed, and it's unusual that it's climbing in that trajectory. But the one thing you can expect from any commodity, and gold included, is it will be cyclical. There will be some return back to normality at some stage, somewhere down the line. Unless, of course, the world goes pear-shaped, and then it becomes a safe haven trade where everybody wants to own gold. But yeah, gold is a great trade. It's a good trading commodity, but I tend not to invest in my investment portfolio. I try to stay away from mines and commodities and things like that, because they are very cyclical and they tend not to just go up in a straight line. But that said, I mean, the mining companies do grow over time as well. They tend to stick around at the same price. Cool, Coral. Yeah, it's a pleasure. I just, that's just the way it is, you know. It's not from me. It's not from my heart. It's just, that's what commodities are. I agree with Lincoln and Kevin. Yeah, I like driving my own cars. But I don't know. Maybe one day I'll try out the Google car if they ever got it. Yeah, let someone else drive me around. Should be interesting. Yeah, I don't know, the future. Interesting. I don't mind the future. I'm all for it, and I'm all part of it, and I grow with it. Otherwise, I wouldn't even be here making these videos with you guys if I was scared of the future, would I? I wouldn't touch this stuff. But you know, I actually love this stuff. That's why I love. I mean, even trading, having computers. Somebody said to me the other day, "You never would have dreamed you would have been in like the trading like this." And I actually said I actually did dream of it, because I grew up in that time when we watched Captain Kirk and Star Trek and stuff like that. Don't laugh. That was a long time ago, eh? But yeah, I dreamed of stuff like this, and when we got it, it was super exciting. Let's be honest, super exciting to get this stuff, and I really enjoyed it, and I've always enjoyed it. So I enjoy working with the technology and that sort of thing, but you do have to stay grounded. You've got to keep your feet on the ground and reach for the sky, like they say, and you know, just look beyond it and make sure you understand that it's not just squiggly lines, that it's not just lines that we're looking at. We're not just looking at lines. We're actually trading something. at the end of the day, because that's where we make our mistake. We just see lines and we just see maths and we just see numbers. And then you tend to forget that as efficient as the market is, there's no algorithm searching you out. There's no robot searching you out. The Terminator's not standing at your front door. Okay. There's a bunch of other traders that are searching you out looking for your money. Not the Terminator, I promise you. How's it, Luigi? Welcome. Good to have you. Good to have you. It just seems a lot of people don't quite understand that concept. They don't quite get that concept, and they still believe that the market's a very objective and very efficient place. The market is efficient, but objective not, because human beings are subjective, and that's it. We really do buy on emotion. We really do sell on emotion, and that's how it goes. Whether we've got a bot or not, everything is done with emotions, and that's what makes it efficient. Is the fact that some people will have different opinions to others and will make money that way. Because one of us will be right and one of us will be wrong. It's a 50-50 game. I tell you, I must be the most controversial trader out there when it comes to that statement, when it comes to that belief and that way of thinking. And I'm pretty sure there's a lot of traders out there that get angry with that story, but if you've got common sense, you'll understand it. It's just how it is. So like I said, guys, I am looking at trying to, do something for the ask me, in the comments and stuff like that. And I'm definitely for the members in the morning. I'll definitely on the members video, I'll definitely do answers there. But I'm thinking of, putting something together on a weekly basis for the, doing a weekly rundown. We'll look at the charts for the week and we'll answer some questions and things like that at the end of the week and see how that goes. I can only do so much though. That's the big thing, It's not like I'm sitting here with some massive production team or anything like that, like some of these fancy dudes. I'm just showing you guys what I do for trading. Yeah, no, totally. So I showed Frank. I don't know if Frank is here at the moment. I showed him this morning how to take a trade size because he asked that question. So I'm pretty sure he's not the only one, and I'm sure there's a lot of guys out there that want to know how to take a trade size on any given trade, on any given day. And it's not difficult. It's actually very easy on most platforms, but on some of the platforms it becomes more complicated. But he does ask particularly here on CTrader. So effectively what you do is if you're on the Euro US dollar and you want to place an order, all you do is you see here's a stop loss, here's a take profit. Just click on the stop loss. Click on the size and the amount of lots that you want. But you wouldn't know until you've had a look at where you want to put your stop loss. So I decided the stop loss will be here, 1038. Then you just type that in that area over there. And it'll tell you the percentage of your stop loss, which you want, which is 1%. And it tells you, your stop loss is $250. Okay, I'm using this one because it's pretty close to cost at the moment. So, because this does tend to move around. So now if you want to take a trade, you know that if your stop loss is there and you take 0.5 lots, then it's going to work out to a $250 stop loss. So that's 1%. So you're happy with that. But then you want to know that your risk to rewards are good. So your take profits up here at 105.2, which is even before the resistance and pretty much just around the highs here. 105.3, I've put it in at. That gives me a 2% profit almost, which is 2 to 1. I'm not even asking for that. I just put that, I'll put that in before I even look. And then it tells me you actually got a 2 to 1, which I'm really happy about. And then you can see your estimated profits, 475 or whatever. And then you've got a good trade and you can just click place order. And that's as simple as it gets on CTrader and TradingView, very much the same, and a number of other platforms as well. So, just that for information, but also if you're looking, for example, I'm just going to take us over to another area and I'm going to go and have a look quickly at, let's just go over here. I've got to change it. It's always a little bit complicated at this point, but that's just how it is. Sorry, this is just the page it landed on. Okay, where are we here? There, homepage. Yeah, I've got to look around the computer to find this. If you want this funded trader thing, it's in the link below. I didn't want to land on that. I'm actually looking for this. Yeah, position size calculator. Position size calculator is, you can use this if you've got MT5 or something like that. It works for FX, like my FX book. You can, they're free. I mean, I don't even sign up. It's sign in, use it. It's free, totally free. And you know, you can just choose your currency pair, the money you're using, what currency you're using, the account size that you've got, the risk ratio you want to have, the amount of pips, say it's 500 pips, and then the trade size will work out. They'll calculate, and it will calculate this. This is the sizing that you need. Then you can just go to your account and see if this sizing works in a similar way to the account that you've got. Let's see what's on the news today. Tensions between the Ukraine finance. Yep. Guess the Ukraine's not happy with old Trumpy being in charge. Walmeat beats profit. Trump's first month as traders. Trump eyes giving taxpayers cut. Oh yeah, the taxpayer cut. Amazing. I guess the guys will be off to the bank cashing that check. Markets all-time highs come with a load of anxiety. I've noticed that. I've noticed that traders are very scared this year. They're very scared of what's going to happen next. And they're not really sure of where the markets are going and is the market going to crash. So everybody's wandering around with fear at the moment. And as you know, fear is a big thing in the markets. Yeah, totally. Let's take this back to the charts, 'cause that's where we want to be. Go. Let's go back to the charts. Righto. At least I hope we're back on the charts. Yeah, we are back on the charts, so that's good. Right. Yeah, so that's just for information, guys. You know, if you want to do something like that. The other thing you can do with MT5 is you go to the MQL5 community tab, top right-hand corner. Click on that. There's a whole bunch of apps there that you can download, that you can use. Don't download them all because it's just going to confuse the hell out of you. But there's a few free ones there that you can use that will also calculate your lot size or trade size or whatever the case. The one thing I didn't like about most of them is they sort of land up on my chart and they're in my system and all that. And I like my charts completely clean. So what I normally do on MT5 is I kind of get an idea of what size my lots are on that broker. And then I kind of get an idea of what size I can trade where and how. And I remember. So you can work it out that way as well. Just work it back. Another way to do it, if you can, I can't get it anymore, but I used to be able to get a demo account on MT5 in the old days from the broker, but they don't give it to me anymore because I've been with them for so many years, so I don't even have a demo account there anymore. But when I could have one, and if you're still new, I'm sure you can, then what you can do is you can just work it out on that account quickly and then go back to your real account and take the trade if you want to as well. That also, you can experiment and just see what size the trade works out to be. That can also work out for you if you can do that, because you can have it on the same platform, I think. But I haven't been able to get one for years, so I can't even do it that way. I'm sure you can get demo accounts on other platforms, but if you want it on the same platform, I know I can't do it anymore, but I used to be able to do it. And it was very helpful. It's very useful. So I just hate it when, you know, like a trade like this just sits around doing nothing. A trade like this just sits around messing about. Yeah, you know, it doesn't want to run. Wouldn't it be nice if trades just shot off and ran in the direction you wanted them to, like they should do? That would be great. That would make the markets really efficient, wouldn't it? Yeah, that's what you really want. That's the efficiency we're actually looking for. Not this other BS that they come up with. Oh, no, totally. And then the New Zealand dollar, US dollar is still moving in the right direction, so that's going okay. History. I forgot about the history. Here's the one that hurts the most. I moved the stop loss down because I went to sleep. And I moved it down to $140 in profit. And woke up with it taken out And you know, we could have made $400 here. I get so annoyed with myself sometimes. If I hadn't moved the stop loss, it would have been fine. Yep, but okay. Yeah, it's a profit nonetheless. Then there's the break-even one there, the Euro Canadian there, the US Jap. Well, that's been this week. That's how the week has been. I mean, if we were scalpers, we would have been perfectly happy with those profits. As you can see, I'm clearly not happy with those profits at all. Those are just didn't work out. Could have done so much better with those trades. Could have done so much better. Oh yes, somebody asked me to have a look at more of the cryptos. So here's Bitcoin, guys, and everything tends to follow Bitcoins. So Bitcoin is going nowhere. It's just sitting at the same price. So it's just waiting for that moment to scare you all and jump in one or other direction. We go to all symbols. Let's have a look. What crypto have we got? Shall we have a look at ETH? Flatline. That's almost like it died. You know, there's no heartbeat here. Nothing happening. Then what's Litecoin? Eh? Right. So that's sort of bullish, but there's a double top not really going anywhere. I'd say it's still going up, but yeah. This one, not much happening there. Guys, there's not much happening in crypto at the moment. It's kind of just, this one's sort of falling off, and that one's kind of flat, and that one's kind of going up. Bitcoin, just flat. I would wait for it to fall through this level here, give us a nice entry at a much lower level. So just my thoughts on crypto. I'm not a crypto trader, as you know. I don't have much time for crypto. As far as I'm concerned, crypto is a big Ponzi scheme. I agree with some of the people who know about crypto when they say it's a big Ponzi scheme and one day you're going to wake up with no money. I agree with them. It's fresh air. The trouble is now, what crypto has become is too big to fail. You know, the old terminology, too big to fail. Massive companies are invested in it now. Massive amounts of money are invested in it now. So now crypto becomes too big to fail. If crypto goes down, we're going with it, you know, so they're going to keep it floating. They're going to do something about it. Even though it's fresh air, they're going to look after it. So you can be pretty safe in the knowledge that they're not just going to let it die, I don't think. I don't think they would. Particularly Bitcoin anyway. Bitcoin, they'll keep it going. Some of the other ones, they might let that go. But the Bitcoin, I think they'll look after that as much as they can. Definitely. Okay. So why do 70% of traders lose? Why do most traders lose? Well, it's quite simple, really. Because of fear, because of FOMO, because of the psychology behind trading. Yep. Because most people aren't able to sit on their hands. They're not patient. Greed's a big one. Yeah. The emperor's new currency, invisible money. Yeah. Now, Kevin, the huge investors in crypto are mostly in Bitcoin. Yeah, totally. And so Bitcoin has become the too big to fail. You know, the scary part is what if all the other cryptos were to start failing around it? You know, what would happen then? But no, totally. There's a lot of people that believe in it. They believe in it wholeheartedly. People have got involved in trading in crypto like there's nothing else. I remember when it was Forex, when everybody got into Forex and there was nothing else but Forex. Everybody was walking around with a mobile phone just trading Forex. And that just sort of fell away and everybody's just trading crypto now. Insanely enough. It's a fad, I suppose. Fad. Yeah, when you say there are thousands of coins which can be here today and gone tomorrow, the coins to me are like fresh air. I can't hold anything. I can't look at coins and say, oh, I got that much Bitcoin. Literally, it's invisible. Invisible coins. That's the strange thing about it. Yeah. Yeah. That's kind of interesting how these things are put together, how these markets are put together, you know. Interesting. Most people don't want to hear about loss. So let's not talk too much about loss, eh? Maybe I should put the 5-minute charts on and we'll trade on 5 minutes just for fun. No, we're not going there. We're not going down that road. Definitely not. Been down there in my life. All those years ago, I tried this short-term quick trading thing. You spend your life sitting at the computer taking these trades. And the problem with that kind of trading is you really do need 100% win rate. And you know, I think a win rate is meaningless. Because one trade wipes out all those wins that you worked so hard for. I tell you what, it's so soul-destroying that. Crazy in its own way. Crazy in its own way. But it does teach you that a win rate is meaningless. It's worthless. It doesn't do anything for you. You know, you can walk around and say, I won 8 trades. How much money did you make? I lost it all in the 8th trade, 9th trade, yeah. It all went down the toilet. Most traders end up going to the higher time frames and trading a bit slower and moving up to the 4 hours in the day and that sort of thing on the 1 hour. The 1 hour is not too bad. If you trade on the 1 hour, you're pretty good. You know, I think if you're trading on the 15-minute, 30-minute, kind of pushing the envelope, you might get away with it, but you're pushing the envelope. But the 1 hour, 4 hour, and day, your positions should be okay. You know, you're in position trading, you should be good. Take your levels from the day, and then you should be okay. You know, that'll keep you going. Then you're in the pound seats. Oh, once again, the pun, if you're in the UK, pound seats. Yeah, totally. That would work for you. Yeah, you all know the reason we take our trades off of these charts is because human beings are creatures of habit. So this is the US dollar, Japanese yen. Wow. Boy, has that fallen off the bus. Maybe you get a long trade out of here soon. Eh? Let's have a look. Ooh. See, guys, it's in this range here. And it's making it smaller so we can see it. She shot up, and she's come down, failed, gone back up, hit this area, come all the way back down to here. I got a feeling that this is going to be a really good long trade soon. Let's just put that in there for the hell of it. Doesn't look too bad. Yeah. Very close to that. Okay. I think what we would do for this one, we're just going to move that out a bit because that has now changed. And I think the long trade will be as and when the price gets through there. Yeah. Totally. That's on the H4. There's your daily. Major support down here on the daily, which is quite far down, but I think that's actually good enough there. I think it's actually going to sit there. How's the weekly? Yeah, that's the main one. Okay, so what I'll look out for is if we get a long going through, yeah. It starts to break back up through there. Okay. Interesting that. US dollar, Japanese yen, that's quite a collapse. I like to look at many different time frames before deciding on a trade. Yeah. All you got to remember, Lincoln, with the time frames, and that's what I always tell everybody, is think of it as a sample size. Think of it as, you know, the amount of people in a room doing research. You know, if you've got a result from 5 people, will you start your billion-dollar company on that? If you've got a result from 1,000 people on the same subject, then you might consider it. And it's the same with trading. If you get a result from a 5-minute chart, it's the same as those 5 people. If you get a result from a day chart, that's like having 1,000 people in the room. So the result is that much more reliable. The information you're getting is that much more reliable than what you're getting on a 5-minute. So when you're trading down to a 5-minute and looking for those sniper entries because you want to get in, just remember that your information is becoming less and less and less and less reliable as you go down the charts. And always remember what information you had at the top. Now, one thing I used to do when I was younger, and for example, now if you look at gold, it should work on gold actually. Take it right from the top. Okay, so you go from the day, you could even go from the weekly, right? So you start at the weekly, and you say, that's bullish, that's a strong upward trend. Go down to the daily, that's bullish, strong upward trend. Go down, H4, that's bullish, strong upward trend. Go down on the 1 hour, that's bullish, strong upward trend. Go down to the 30, that's bullish, but starting to fall over. Still bullish though, still a strong upward trend. Then you go down a bit further to the 15-minute chart. Now you've got a little bit more bearish, but it's still in the upward trend. You're still happy. You go down to the M5, suddenly you've got this whole completely different picture out of the scenario. Suddenly you've got this rollover, everything's coming down. So, but it's still bullish. So, but what you know if you're trading on the 5-minute chart, from all those charts that you just came from, is that you can only go long. That's what you know. That's the information that you've gathered from all those higher time frames. All those higher time frames just told you that everything is long. So if you are trading on a 5-minute time frame, you shouldn't be going short. You should be looking for the long trade because everything above it is long. In other words, the overall is bullish. The big sample size is bullish. So if you want to trade on that smaller time frame, then look at what was above. That's how I used to trade the smaller time frames when I was younger and silly, and I used to dabble in that stuff. That's how I would trade it. I'd look at what the reliable information was telling me, and then when I got to the unreliable information, it didn't really matter what the chart looked like so much as I knew that the overall picture was bullish or bearish, whichever, and I only traded in that one direction according to the information I had from the higher time frames. And that's how I used to trade the lower time frames. It was the best way. That would give me a lot of information. But nowadays, I don't touch the lower time frames. I don't waste my time with the lower time frames because I don't like the soul-destroying result. And Frank said all the yen pairs had a good downward movement during the Asian session today, which is interesting. Very interesting. They all had good downward moving. That one, why didn't I stay in that trade? Japanese yen, Great British pound. So there you go. So Japanese yen, if you go and look at the news, there'll be a news item that I haven't seen that will have caused that. And then the Nikkei, is not doing much. It's kind of sitting in the middle here, doing pretty much nothing. You're not really getting much of a trade out of it. And then US dollar, Canadian dollar. This one I actually did call short, but it's kind of gone a little bit long. But okay, one of those things. You'll notice, guys, I did call the euro US dollar short up here, but I changed my mind this morning and went long. And that's because it broke through this trend resistance. So that's where I went long. Because it broke through the trend resistance, I decided to go to the long side. Futures, Barizo. Good morning from Florida, US. Good morning from Florida. Welcome. Good to have you on board. Good to see you here. Be nice if we had more people here. That would be great. As I say, the Tuesday show, I'm actually going to move it up to, on my side, I was starting it at 10 o'clock GMT plus 2. I'll start it at 11. And Thursday, I'll still keep it this time, the 2:30 GMT plus 2. Yeah. Anybody got some good trades on the go today? Some really interesting trades that we can talk about? Maybe we can take it on this platform. We could be doing worse here. We had a bad start to this platform, I must say. I mean, January didn't go well for us, but yeah, we're picking up again now. Coming back. Brent crude oil I was looking at this morning and thinking it's going to fall over, but it seems to have held its own. Seems to be holding on quite strong. Let me just see here. Yeah, it's not looking too bad, Brent crude oil. Looks like we'll be a... Ooh, no, what are we doing now? Let's leave that there. Looks like it'll be okay. Yeah, just putting that in short term just to see where we stand. I always make them yellow so I know what they are. Is that on the 4 hour? Yeah, 4 hour. I think if it breaks down to the downside, we'll see it. The Brent crude seems to be staying strong for now. As Kevin says, on the 5 minute, you have to be watching the chart constantly, and that is correct, John. That's totally it. What I used to do when I was doing this when I was younger and silly, I would sit and watch the charts while trading. And if I left the charts, I'd have to be out of all my trades. There was no way I could stay in my trades. But then over the years, I also learned that, okay, this is silly. You know, you can't be sitting trading 5 minute charts. And I moved up the time frames again back to where I should be. And then I did do the silly thing of looking for sniper entries. So in other words, I want to go long here. So let me go back and just see if I can get a sniper entry at the 5 minute chart for a long trade. But the information's so unreliable here that the sniper entry is not going to make a hell of a lot of difference to your trade over here at the end of the day anyway. And then what you have to learn to do is just take a step back, just take a big step back and say, there's the bigger picture. I'm just going to trade into the bigger picture and we'll see what happens. And it's much more relaxing and much better for you at the end of the day. No, Kevin, you're totally right. 5 minute chart, 1 minute chart, even 15 minute charts, you've got to sit and you've got to watch those charts. Or you've got to say, I'm only going to trade for 1 hour a day or 2 hours a day. I did a little bit of research the other day. I did a little thing on the post where I did a survey asking you guys about how many hours you spend on the charts. And most people actually came up with 4 hours. A few with 1 hour. I don't know how you get away with 1 hour, but okay. That's pretty tricky. I think most people will be in the 3 to 4 hour range. Even myself, you know, I look at the charts for a couple of hours a day and check what's going where. I do my research, what have you. I can't get away with that in an hour. It's not possible. So yeah, I'm in the group of nearly 4 hours, and but some of you are 8 hours and all day and that sort of thing, and that can be quite mind-boggling. You've got to get a life as well, Got to get out there. But yeah, I think most people are in the 3 to 4 hours. Okay, been in euro, Aussie dollar for a few hours. Take profit 163.217. Euro, Aussie dollar. You know, when you've got such a big watch list, then it's not on my watch list, that's all. Yeah. Might as well just put them all on. Doesn't really matter. Euro, Aussie dollar. What's your target? 63217. Nice. Nice. A nice trade. Looking good. Looks like a decent trade, man. Yeah. I'd leave that. Wait for it to get to target. That's gonna bring you home the bacon. Looks like she's coming down nicely. You're probably gonna get another nice leg down, similar to that one, which will give you all the way down here. Yeah, very nice, very nice. Like that one. Down here, yeah. Yeah, that's a good trade. Let's see how she goes. I like that one. Oh. Yes, Kevin, not financial advice, Lincoln. Ha ha ha. It's not it's never financial advice because I'm not allowed to give you financial advice, for heaven's sakes. I can see it's a sell, Frank. If you were in a buy here, I'd be worried. But yeah, no, you're definitely in a sell, eh? Yeah. I'm totally new at this. I think that's my gut. If you're new to this, you really are in the best place possible because most guys that are new end up buying an expensive course and they learn about all these indicators and moving averages and MACDs. Not to say you mustn't learn about them. And if you go back on my videos, there'll be a few there that'll show you how to trade with those things, but don't trade with them. Just learn how to use them and what they're about. You're in the best place now. You're learning how to work with bear price action, keep a strategy in place and understand that you're trading against other traders because most people don't learn that, eh? Believe me, most people don't learn that. Most people get taught that there's a system and a win rate, and they're going to make money from that system, and that system's just going to make them such a big profit at the end of the day, and it's never going to fail, and it's going to turn $100 into I don't know how much, and most people end up there. So glad you're here. As beginners, if anyone's a beginner and they're here, not to scratch our heads, but you guys are in the right place. You're gonna learn that it's basic and it's easy and it's not. Don't overcomplicate it. You know what the guys tend to teach you in the courses and that a lot is all the abbreviations and all the names of things and all the ways to talk about the market so that you sound like like a trader. Okay, it's like being a pilot. Like you've got all these abbreviations and Roger and all that sort of stuff, and then you're a pilot. I'm not really teaching you the important stuff, like how to make money. What's the point of knowing how to name something or the abbreviations or whatever the case at the end of the day? That's not going to help you. What you need to know is how to trade and simple. And they make it so complicated. It drives me insane. Don't do that, don't make it so complicated and go mad. It's crazy how complicated the Oaks can make it if they want to. Like I said before, got nothing against any other trader or any other trader that wants to release their information out there. And as far as I'm concerned, like I always say, you can learn something from absolutely everyone. Doesn't matter what kind of trader they are, what type of system they're trading. You can learn something from every single trader out there. And if there's free information, grab it with both hands, because at the end of the day, if you take all the information and you collate it together, you can teach yourself how to trade, and you can teach yourself a system that you'll be comfortable with and it'll work for you. Now, you know that I separate system from strategy. In other words, the system is the high probability trade. So when you take a high probability trade, you can learn that system from any trader. It doesn't matter. And if you've put a system together that tends to work for you in the market and you can get good high probability trades from that system, that's fantastic. Just don't expect that to make your profit for you. To make your profit, as you know, you just got to have the strategy in place. And you know what the strategy is by now. The simple risk strategy of 2 to 1, 1%, and just risk 1% of your account. Keep the risk the same on all your trades, as I say, and just take the more profit than you take loss. Somewhere down the line, you're going to come out on the better side of the trades. So use any system that you want and learn the systems, learn from everyone, and figure out what works best for you. My best recommendation is always keep it simple. Keep it as simple as possible. Don't get overcomplicated with everything and don't go mad. Don't play into all these fancy names and little triangles and goodies and whatnot. As Lincoln says here, no, instead choose to self-teach if I could. It's the best way. Teach yourself. How do you think I learned to trade the stock market? Yes, I admit I bought a course when I was younger and it wasn't on computer. It was in a big file. I didn't really do much with that course. I learned as much as I could from it, but really most of my trading is self-taught. Most of everything I know today, I taught myself. I learned from myself and from people I know and people around me and mentors and stuff like that. You pick up information from them. That's the best way to go about it. It's much simpler than going on a course, actually. You know, I remember going through that file and it was daunting. It's massive, eh? The file was massive. It was huge. Imagine how huge that file was. And I remember thinking to myself, there's no way. I didn't actually finish that course. I went through it and I did the phone calls and I did the whole thing and I did the demo stuff and that. And there was a point where I just said, no, it's time for me to figure this out for myself. And I did. I just went and figured it out for myself. I just started trading. And in those days, we didn't have demo accounts like this. I mean, I was on that course. I had a kind of a demo thing where I could phone in and, you know, they would do the whole demo thing. It was a bit of a joke, really. And then I decided, you know what, let's just do it for real. Let's just get involved and let's just get in there. And I did. And then I just started learning for myself. And then I met a couple of other traders along the way. And, you know, you find out what they're doing and what you're doing. We didn't have the YouTube then. And yeah, we grew from there. And then when computers came along, this made it so much easier. And it also made it much easier to find other people and whatnot. And then I went on a few conferences as well over time with brokers, you know, brokers that I was trading with. They would always have some kind of a meeting or a conference. And then you could speak to like-minded traders, get to know what they're doing and stuff like that. You know, the best way to learn is actually to teach yourself. You'll make a lot of mistakes. But look, if you start here and you with this group, for example, and you know you've got a basis to work from, and then you can make your mistakes from there and grow from there. Yes, Frank. My thoughts on moving. Frank asked, what's my thoughts on moving the stop loss completely out of the way as news approaches to avoid being touched out? What you do have to be careful of, though. Now, I have done this in the past. Believe me, I've done it a number of times because, as I always say, when these small news events take place, you often end up with a situation where you get spiked out because the price goes, spikes, comes back to where it was 9 times out of 10. But there is that 1 time out of 10 where it just keeps on going because the news is so bad. Watch out for that. Just watch out for that. Don't get caught up in that. And it can also cause you to revenge trade or turn the trade around. And as you do that, it turns around and spikes back the other way. So just be very careful of that. And the spikes can be pretty long. What I do try to do, and it's caught me out a few times, where it normally catches me out is in a scenario where I've put the stop loss and then moved the stop loss into cost. And or I've moved the stop loss into profit and I'm busy following the trade up. That's where it'll normally catch me out because then the stop loss is kind of in the wrong place, let's say. So yeah, in that case, you could move your stop loss way out of the way and then, you know, go through the news event. And that normally happens to me that I'm not looking. The stop loss has been moved into a profit or into break even or whatever, and then it spikes back and takes it out. And I get taken out in a profit or at break even, and that is quite annoying. So yeah, it's a good idea in that scenario if you know there's a big news event coming, go and take those stop losses and put them somewhere like far away where they're supposed to be. That might be a good idea. I've done that before many a time, but like I say, just be very careful of that one moment when the price just keeps on going. You know, that comes from experience, not so much for myself as I've seen it with close friends where they don't believe in stop loss, or, no two traders believe in exactly the same stuff most of the time. And I've had some close friends lose gargantuan amounts of money because of things like that. Like the belief in, oh no, we're just going to move the stop loss away because this is just rubbish that's coming up right now. And then it just keeps on going, because nobody wants to believe it when it's going wrong. It's funny when there's a big crash in the markets as well. It'll happen on a Friday afternoon. And you'll see the markets going down. You'll see the markets crashing. You'll hear all the rhetoric and news around it. But for some other strange, odd reason or another, you don't trade out of your trades. You hold on to them for dear life because they're in loss. And, when you wake up again, you're in deep trouble. Now, I'm one of the few guys that when I see something like that happening, I'm quick to say, well, the world's ending, I'm getting out of here. I'm done. And I'll just sell. Even if they're all in the red, I'll get out. And Monday morning comes along and I'm comfortable. Whatever happened. Whereas some of my very close friends would just hold on. And then Monday morning comes along and it's disastrous. What you've got to understand with geared trading, I mean, one of you guys mentioned you've got a 500 to 1 account, which is great. Most of them are 100 to 1, 500 to 1. What you've got to understand is you're not just going to lose the money that you get for. So, for example, look, I'll exclude funded trader accounts like this. A funded trader account like this, you pay $100 for. Let's go and see, how much do you pay for these accounts now? I'm just going to go and check quickly, guys, because I've actually lost touch with how much you pay. Can you believe it? Just got to find it here. There we go. I just want to see quickly. I know they were on special. Yeah, okay. So now you can get a 25K account for $89, 50K, 149, 100K, 249. Okay, these are for evaluation accounts. If you go for instant funding, a bit more expensive. So $179 for an instant funding account. Be careful with instant funding here, guys. Remember your max overall drawdown and stuff. That's pretty tight. Whereas it's much more lenient on the evaluation accounts where you qualify upwards. But anyway, yeah, so this type of account won't cost you a lot of money. And if it goes down, they just close the account. So that's fine. If you want one of these, there's a link in the description, as I always tell you guys. But let's just go back to the charts. And yeah. Let's just go back to the charts here. So now what you've got to understand is, like with a funded account like this, you're going to wake up on Monday morning, they will have just closed your account and said, well, you didn't make it. Tough titties. We've closed it. But if you've got a cash account, and let's say you've got a $100,000 account, and let's say there's $100,000 in the account, and over the weekend, it goes $300,000 into debt. When it opens on Monday morning, it's $300,000 down. It's taken all your stop losses out on Monday morning. That's fine. But there's a gap, right? There's no guaranteed stops. Don't even think about that. So now Monday morning comes along. It's $300,000 down. Effectively, you owe the broker $200,000. Hopefully you've got it in your bank account. So it doesn't stop at the $100,000 you've got in your account. It doesn't go, oh, you only had $100,000, so that's what you've lost. No. They want the other $200,000 that it's gone down as well, because it opened with a big gap down, and they want that money. So be very careful of that on a cash account. on geared trading, when you're trading things like 500 to 1 or 100 to 1, okay? Watch what you're doing. Watch your stops. Guaranteed stops you'll get with a funded trader account like this. Cost you $100, you lose the account. They close the account, you lose the $100. You're not going to lose the hundreds of thousands of dollars. But when it comes to a cash account, they will want the extra money that's missing on a Monday morning if it goes that route. Keep that in mind. Don't forget it. I had friends that happened to, and the broker's calling him, and they're asking him for the money, and he doesn't have it. Then he's calling you, can you lend me some dosh? I gotta pay the broke. Whoa, dude, just watch out. Watch out. It's gargantuanly bad. Okay, don't get caught out in that. That's why I always say, if you are long on an index on the weekend, do be very cautious on gear trading, that is. If it's on your shares, nothing can happen to you because your shares are your shares. It's 1 to 1. If it goes to 0, you got 0. If it goes to up, you got more. And if it goes down, you got less. Okay. But when you're geared, that's a different ball game. So when you're geared, you don't want to be sitting long on indexes over the weekend, waking up on Monday morning with a problem. If you're short, I always look at the risk and I say, if I'm short on an index, what are the chances of me waking up on Monday morning and the world's so euphoric that I'm bankrupt because I was short? Probably not. It's probably not going to happen. I've never seen the world that euphoric. But the risk on the other side is if I'm long on the US 500, say, and I go into the weekend, I could quite easily wake up on Monday morning with a disaster because things can go wrong. So that's what you've got to look at with risk. Now, on Forex, similar things can happen, because dollars can crash, and yens can crash, and things can get out of hand over weekends. So yeah, the Forex can work both ways. So very, very careful on that. And commodities as well. But indexes, if I'm short on an index, I will often take the chance. And you'll see I'll often take the chance on Forex as well. Because in general, Forex tends to stick around in between levels. So I take chances, big chances on Forex and hold them over weekends. But that's my personal thing that I do. Okay. Every Friday Kevin, every Friday afternoon, have a look at which trades you need to close, which trades you don't want to take the risk on. That's why in Oz they restricted it to 130 a couple of years ago. 1 to 30, 30 to 1, Yeah, I get that. That makes sense. It does make sense. You know, the dangers of it are insane. It's quite crazy. And it can actually close a brokerage down if they don't get that right. Because it's always the weekend. It's always that moment when it's closed. Because if you're closed for an hour during the week, it's an hour. It'll take your stop loss out. Probably still be within reason. But if it's a whole weekend, it can be so bad. I've seen it go bad. I've seen it go really bad. And it can be disastrous. So on a Friday, what I do is I look at my risk. I look at what's going on in the world. When I say I don't look at the news and fundamentals, I really do. But only in a big way. Like what could go wrong on the weekend now? What are they talking about? What are the rumors and murmurs? And are people talking about attacking other countries or anything to that effect, or doing something untoward? Is there anything that could cause the markets to crash? Is there a bank teetering on bankruptcy or anything like that? Then you kind of know where you stand for the weekend. Still, preferably, I wouldn't like to be holding an index over the weekend, but I might take risk on a couple of Forex trades or something like that. But I'll have a look at what's going on at any particular time, if anything, and what the threats are. What the threats are in the marketplace. The risk. UK 100. Who said they were short on the UK 100 earlier? One of you guys said you were short. Was it Frank? Not sure. One of you guys are already short on the UK 100, and we looked at it earlier. So the UK 100, what I actually said was, that's great. You know, there's this head and shoulders that's developed here. The head and shoulders has to play out. In other words, this candle has to come down below it slightly, so below that low over there, for this to play out as a nice short trade. At the moment, I would be waiting for it to break through this trend support line, which I took from the day. I just want to show you. I took it from the line chart as well, because I see you're gonna say now it's going through the lines, but you see here 1, 2, 3 touches. I've drawn that up, and this is my trend support on the daily. So on the 4 hour, it's there as well. What you can do is you can draw another one a little bit higher up on the 4 hour if you want to. I'm just being cautious here by leaving that on my day. So there we are on the 4 hour. Take it back to the candles. Now you'll see my line goes through the candles, and that's because the candles give you highs and lows and spikes. That's why I don't put the lines on the candles. I like to put the lines on the line charts on the closing prices. Gives me a more accurate reading of the situation. But there you go. There's my trend support. I would wait for my trend support to break to the downside before jumping into any kind of a trade. But now, you know, you're looking for it to break through here for a short or to bounce up here for a long. But if there's something we did not put in earlier, and here is a huge, 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 huge demand area. If you guys know what demand is. If not, go and have a look at my videos. There is a video down there on demand levels and supply and demand. Look at where it is. You see that, guys? It crosses right over this wonderful trend support. This is on the 4 hour now, on the candles. We've drawn this demand area in. So now you've got this support going right through in exactly the same area. So what that actually tells me is the price may come down to this exact spot and then bounce up. That's probably not going below 8.5. It's probably going to hit here, bounce and go up. It's going to take this money and go up. It's not going to break through. If you want to go short from here, you can go short with a target around this 8.5 level to take profit, get out of the trade and let it go up. But it's a risky trade. It is a risky trade because at the moment all the indexes are kind of long, and there's a good chance that it could go long as well. So do be careful of that. But yeah, it could go all the way down into that area there. So that's your UK 100 for now. But, you know, there isn't a trade. This isn't screaming at me, trade me, at all. It's not shouting at me and saying, Rob, you need to take a short here. Rob, you need to take a long. No, there's nothing screaming at me at the moment. It'll be screaming at me when it gets to this level here. That's when I'll be interested. Or if it breaks below that low, I might look at, yeah, this might be a bit of a short down to there. But other than that, it's not screaming at me. It's not shouting at me. It's not saying trade me at all. And, you know, the FTSE's normally in a range. This one's had a nice up run, nice long run. And in structure, you know, if you look at this, you're going to get quite nice structure if it comes down and starts to go up again. So very much, it's still bullish. It hasn't really gone short. It might even bounce up from here because you see you've got this sort of trend running through here as well. And it could even, in structure, carry on going up. So do be careful if you are short. Like I say, I would wait for some kind of signal from further down here for me to get into that trade. Anyway, that would be my call. Let me know what your thoughts are on the same trade. Okay. Yes. You see, what you've got to be careful of is saying it's holding support, because there is a head and shoulders that's developed here. So while it is a form of support, If it breaks that support, you've got to run the length of that head all the way down, which is down to here. So all indications are that it wants to break that support and head down to this level here. But if you look at the bigger picture tells you that it's in a trend over here, and it's in structure, and it could actually bounce off of this and continue on to the upside. So that's why I say this FTSE is not screaming at me. It's not saying buy me or sell me. It's very much iffy at the moment as to, I would be in two minds looking at this, saying, well, I'm sitting on a head and shoulders, so there's a good chance it breaks to the downside and heads down to this area here. But if I look at it, it's also sitting on that 4-hour in structure, so it could bounce up as well. I'm kind of on a really 50-50 call on this. I'll be gambling if I take a trade either way. I'm not 100% sure which way it'll go, simply because it could go either way according to the technicals that I'm looking at. So it's not a high probability trade for me anymore. It's actually become a 50-50 or a low probability trade. Until such time as it gives me some confirmation that it's broken below that, then it's short, or it gives me a green candle to the upside and tells me it's going long again. Then I get some confirmation. But as it stands right now, there's no high probability trade for me. It's not screaming at me. It's not saying trade me at all. It's saying wait. Wait and see. Because even here, even though this head and shoulders developed, it's got to break below it. And even though it's in that structure, it's got to bounce out of it. So I would like it to be down here. Give me a nice trade out of there. That would be a good trade. Okay. As Lincoln says here now, I'd wait for it to come down to support and rise. There you go. That's good thinking. Patience. Patience is a really, 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 really big thing in this game. But a patience will take you a long way. Take away the FOMO. Take away the fear. Take away the greed. And just be patient. And, you know, as you get older in this game, you become more patient, more relaxed, more laid back. And you start to learn to let things run and see what happens. Okay, so, yeah, look, if a trade's not jumping out at you, it's not jumping out at you, but that could just be me personally. What doesn't jump out for me might jump out immensely for someone else. A lot of trading has also got a lot to do with your gut feel, where you stay, things you see around you. You know, there's a lot going on that can affect you into a trade. So, you know, sometimes what you feel can be just as important as what you see. That's also quite important at the end of the day. Yeah, that's true. So in order for the head and shoulders to work out, we've got to go down. Totally. What you have to understand about a head and shoulders is there's your shoulder, there's a head, there's a shoulder. I'm not really happy with this head and shoulders. I'd like it to be more closer to the line. But okay, let's say that's your line. I can't draw a line in here now for you because the price line is actually here as well. But you see that's the head, the shoulder is on the line. This has not played out. All it's done is given you a pattern. For this pattern to be valid, let's say, you need that candle to close below the low. You need that candle to close just below the low, and then it'll tell you, okay, we kind of got a head and shoulders here. We can play it out. That's how it works. So you get a sort of shoulder, and it's got to close below that. If this breaks to the upside and it breaks that high of that shoulder, the head and shoulders is null and void, does not count anymore. That's patterns, but I don't want to confuse you guys with patterns and go down that road, but it's good to know about patterns. They're quite handy. If you spot them in the market, they can be quite useful to you. Somewhere down here, we had a descending triangle as well. I can't remember which one it was. It might have been here. There was a descending triangle here. That's quite interesting as well. You know, have a look at these patterns, and they can be quite useful to you. Here you go. What's this? US dollar, Japanese yen. Big descending triangle. You just got to wait and see which side it resolves to. This will probably resolve to the downside. That book, Thinking Fast and Slow, your subconscious mind is talking to you. Yeah, that's true. There's a lot of good books out there that you can go and read that'll be of some interest to you somewhere down the line. You know, I've even put some good reading material in the description that's useful to you in trading that you can get off Amazon and stuff like that. But yeah, that's the best way, like I say, is always teach yourself, find your way. And, you know, this is just, like I say, the high probability of trading. It's very important to understand the psychology of trading. And that's what a lot of these books will help you with in most cases. You don't want to learn about, I mean, as far as the system goes and, you know, the high probability trades that you can learn easily off any trader. What you need to learn is the strategy and the psychology, get around the FOMO, get around the patience, get around the fear. Fear is your worst enemy. Fear is going to destroy you in trading. That's the big one. And Tom Gunn says everyone should read that book. Yes. Okay. You know, on my watch list currently, I took the trades already today. So US 500 was my long, Euro US dollar was my long. I'm not really watching anything else just at the moment. I've got all these here. This morning I was looking at Brent, but it has bounced up now. I was waiting to see if it would break to the downside. And US dollar, Canadian dollar, I was looking for a break to the downside. Does seem to be breaking to the downside at the moment. I was waiting for the retest and down. So I want to look at a short on the US dollar, Canadian dollar. That one was interesting me. Got annoyed at that one because although I made a profit, it took my stop loss out in profits. And then which one was it? The euro. These are going nicely. These are going down nicely. Australian dollar, Canadian dollar. That looks like a nice long going to the upside. So there's a few on there if you want to check it out, you know, that are going in our direction. What I'll do on the weekend, I'll do a weekly review like I do. I don't know if you guys noticed this week on the posts, I did put out, you know, like I put out a trade of the day. I put out a weekly trade of the week. So all the weekly trades. And I think what I'll start doing a video on that as well, on trades of the week. Just one video, maybe on the weekend or something. Just trades of the week, what we think the week's going to bring, and, you know, analysis for the week. We can have a look at the trades that are looking interesting at the end of the day. This Australian dollar, Canadian dollar actually looks like a bit long at the moment. But what you've got to be careful of is this massive top here. And that's like that's not even, there was a pincer top there. Look at this. This is another pincer top here. Massive pincer top here. So that could be quite tricky. But that said, it's above the resistance and it'll come back to retest and it might break to the upside. If it breaks through this line, you've probably got a really good long trade on this particular product. But keep an eye out for that as well. That looks pretty good. This euro US dollar was all the way up at $100 now. Now it's dropped back. I tell you what, this thing is being a menace today. Look at that, all the way up and then a long spike down. It's really being a menace. It must go now. Go and finish the trade. Wouldn't that be great? Yeah, the books are great. The books are good for you. You know, as long as they tell you a lot about the psychology and stuff like that, they're always recommended and they're always useful. So hopefully trade of the week will be useful to you guys. I don't know if it will, but I'm going to try and put it out there and see how it goes for you, X. See if it works for you. Did I take a trade? I haven't taken a trade with you guys on the show today. I took this one. When did I take this trade? Yesterday. This one basically this morning. Okay. So we haven't taken one together today. I don't know if anybody wants to take any trades today. The Euro US dollar we're already long. Great British Pound US dollar. It's undecided. Euro, Great British Pound. It still looks short, but risk to reward's not there. US dollar, Canadian dollar. This should really go short. Not much time left in the week though. As you say, the Japanese yen. See if that turns around and goes long. I see gold's doing a little bit of a correction here. Be nice if we get a nice correction down to here. We can get a nice trade in. US 500 is also playing with my feelings. Wall Street. Yeah, you know what? These things really need to do something now. DAX. Bit of a fall. Flat. Okay. Brent going up. UK 100, like I said to you guys, head and shoulders needs to play out. A lot of people are thinking that the markets are going to crash, but that's very much the supermarket mentality. Everybody's thinking because the markets are so expensive, they have to fall down. You're not wrong. I mean, what goes up must come down. But by the same token, in the market, when something's expensive, it's good, and when it's bad, when it's cheap, it's bad. These Japanese yen trades have really taken quite a knock. There's your NASDAQ. Bitcoin's going nowhere as usual. New Zealand dollar, US dollar is going in our favor. Great British Pound, Aussie dollar. US dollar CHF. You're looking for an entry for a sell. Let's have a look. Let's have a look. The US dollar CHF. I'm just going to move this a little bit because it has moved. It has moved on the daily. I'm just looking at this and thinking, I don't really want to move this line down to here, but it might be necessary. See, the line would have been there, but it's not. It's actually more like here. Okay, let's move it to there. And let's see what that looks like on the day. Let's see what it looks like on the H4. Okay, it's undecided at the moment. I mean, that candle is a seriously undecided candle. It's just a little blocky. Well, let's see if it closes below this line and gives us an indication that it wants to go down. There's still, wow, there's not much time left, is there? 6 minutes. This thing's going to close as an undecided candle. Now, an undecided candle is never cool unless it closes as a doji, which in case might point to the downside. Let's just see what it closes as. It closes as a doji. The light purple blocks on the charts are the resistance and the support which we get from the daily levels. The daily levels we take when we put it on a line chart and we draw the resistance and we draw the support in. In other words, the area where the price gets to every single time and bounces off. In other words, every time the price gets to that level, it comes down. That's the resistance. Every time the price gets to this level, it's a support, except in that case where it broke through, and in that case where it broke through back to the upside. But in general, that's a support level that it keeps getting to. Every time it gets to that level, that's the support. So it just tells us when it gets into that area, there's some money lying there. Probably, in all probability, the price will turn around and go in your favor. If anything doesn't make sense, just ask again, okay? Sometimes I go through things too quickly, and I don't mind answering them again. It's no problem, eh? Okay, so you see that's a little blocky. Let's see if we can see it if I make it bigger. See that? Could be a nasty doji, but it looks more like an undecided candle. When you've got a tiny little body in the middle, you've got two long spikes either side of it, all the buyers, all the sellers, guys in the middle, nobody knows which way to go. Totally undecided, and that leaves you with a bit of dilemma as to whether you want to go long or short. Now, the reason the candle is probably undecided is because this is very much in the middle between the resistance, between the support. Because a lot of people don't draw this trend support in. But if it breaks through that trend support, then in all likelihood, this is short. Now, I'm assuming, and assuming is the mother of all evil, but I'm assuming that this is probably going to be a sell. It's probably going to go to the downside. Okay, that's great, Frank. I understand, but that's, you know, the market's subjective and these trend lines are subjective. So you had your trend line where I had it, which is not incorrect. I mean, that's fine. Totally fine. Look at that. All the touch points all the way up there. I'm just drawing it on the candles, which I shouldn't be, but that's perfectly fine. And if you look at it from that perspective, see, I was in two minds on that perspective as well. So you probably noticed that. And you see that broke through nicely. So you took a good trade. You took a really good trade. And now it's come back up to retest. Stay in the trade. Stay in the trade. It's looking good. And I think it'll continue on short. And in all probability, there's your resistance. There's your support. The market's a 50-50 game. In all likelihood, it'll come down to your support. And you'll make lots of money. So, Frank, it's a good trade. Don't stress. Don't stress too much. Just wait for it to play out. There's a reason you took the trade. The reason you took the trade was because of that trend line. That trend line was good. There's nothing wrong with it. I was looking at a new trade and new confirmations, but you've got your confirmation. You've taken that trade on that red candle. It's the correct way to trade, and off she goes. Now it comes back up against you and you think, oh, you know, that's okay. We all get that feeling. It's coming back to retest. It's going to fall over and most likely continue on to the downside and keep on going down. So I don't see a problem with that at all. I think it'll probably go in your favor. You'll probably head on down and head on down to the support levels over here. Trouble now, taking the trade here is because you're in the middle, but that trade over there was in all likelihood a pretty good point and a pretty good trade. We could take this trade right now and go with it and go short, go in a sell, and there would be nothing wrong with it. So we can join you in the trade if you like, Frank. But it's neither here nor there. It just went back up, came back down. Let's just have a look. How far back does this go? It's just been around this area for such a long time, that it really isn't doing much. It's a little bit of a pain in the trade, It'd be nice if it would, it's just been sitting, ranging. So the trouble you've got is it really is sitting in this area here, and it's kind of refusing to get out of here and go. But eventually it might go. And then you'll have a good trade. No, it's fine. I think I'm going to leave our trades as they are for now. It's fine. It does look okay as far as I'm concerned. It looks like a great trade. I think it'll work out for you. I think you'll be just fine. Just watch out for this level over here. I don't want to draw too many levels in because it just confuses the issue, but there is a line here and it's sitting in that range. So you need it to get down to here and cross through. Okay, so just draw that line in as well, Frank, just so that you can see it, just so you know it's there. That is effectively very much a line in the sand because it's crossed through that and it's just been sitting in that range all the way along. So just do yourself a favor and just draw that line in as well, because then you know if it gets to that line, it's either going to give you a green candle bounce out, or it's going to, if it breaks through that, then it's continuing on down. But in all likelihood, you've got all that room from there to make a little profit. So, okay, looks okay. Just draw that line in for yourself as well. It's just teetering around here and being annoying. Okay. Good. Now we know where that's going. I don't think we'll... The risk to rewards not great for us to take the trade here, because we would be taking the trade with only that gap down to there, with the risk being up here. It's almost less than 1-to-1, because I'd need my stop loss up here and take profit here. It's not going to work out for us. Okay. I have my support just below that level. We'll take profit just above the support. Yeah, that's okay. You're pretty much there. It's good. That's great. I can't take the trade for the team, like I said, because the risk to reward isn't there for us at the moment. So we're not going to do that. It's very much a 1-to-1. All right. Okay. Guess the euro US dollar is going to be a headache. So this is, the reward is here. It's not far away, man. We can just go. But it just keeps teetering around here and it wants to mess about. And, well, I'll put the stop loss below that level. So we shall see what happens. It's $51 up at the moment. And the US, I don't think the US price has moved in a day. It's just sitting at this level. Man, oh man, it's broken through the resistance and it just doesn't want to go. It should just bounce up from here. And it's not going. It's very unusual. I'm hoping it's not losing momentum here. We'll see. We shall see. Okay. Right, so I'm glad the trades are working out for you guys and they're on the right track. Going according to plan. Right. Do any of you guys watch videos over the weekend, or, like these trading videos or that, or do research over the weekend on your trades? How much time do you spend doing research on the weekend on your trades? Be interesting to know for everyone else. Do you actually do the research on the weekends? Or do you just come in on Monday morning and look for trades? It's all about risk. Risk. The market's 50-50. Luckily, the market's creatures are, luckily humans are creatures of habit. Tom Gunn says, I do. So, yeah, they are. So, it's a good time. It's a peaceful time. Especially if you've got some time on a Sunday or whatever, just to sit and maybe spend an hour or so and just go over the charts and see what it looks like for the week. It kind of opens up your mindset a little bit as to where things are going. Gives you a picture a clearer picture without all the noise and stuff. Because you end the Friday on a noise, and you end it with everything happening and whatnot, and you've picked your trades. And oddly enough, when you go and look at all again on Sunday or Saturday, the picture kind of changes sometimes and gives you a different picture. And you look at it and think, ooh, maybe next week I'll do that. And sometimes you can even pick trades for the week, which is why I'm going to do that weekly video for you guys now. I'm going to try and throw in a video with a weekly rundown on the markets. I think that might be good for you. If you guys are interested in that, and then you might be able to see, what's happening for the week, what's going down, and what the analysis is. We could throw in a bit of the news and stuff like that. I know some of you guys like the news and what have you, but it's mostly going to be technical. I'll just give you an idea. I think it's a good idea. My goal is still on YouTube not for the trading, on YouTube, to get 100 people streaming with us. Once we get to that, I'll be excited. Then we'll have more live shows together. I do also if I don't have my children staying. I'm glad, Kevin, I'm so glad that you can say children for, that's, my children are old. My daughter's getting married next month. Whoa, big wedding ahead. Yep. Big moment. That's so much fun. Well, that's the good thing about being my age, I suppose. The fun part. Yeah. Okay, so Bruman says sounds good. Gun says sounds good. Yeah, I think if you guys are going to like that sort of thing, I'll put it together and we'll see how it works out. Obviously, I mean, if the videos flop and nobody watches them, then what's the point, And I'm talking to space. So, obviously I want to know that somebody's getting something out of it and somebody's listening and somebody's watching. So as long as I get through to one person, it does make me happy. But obviously you want to know that it's worthwhile that somebody's watching it and it's worthwhile being out there. So I will definitely look into that. That's for sure. See if I can put something out for you guys. Rogers CHF JPY. I have my alerts on for you. Great stuff, Tom. Man. CHF JPY. The perfect trade. Absolutely wonderful trade. I went to bed. I told the guys I put my stop loss in at 140 bucks it was. And I just moved it into profit. And when I went to sleep, it went back and took it out. And then it went all the way down. So that is soul destroying. We could have made so much more money. But it's okay. It's all right. That trade did well, though. It did really well. That trade would have made us a lot of money if I'd just left it alone and not messed about. That's my fault. Yeah. When Bruno says it takes time to grow, I actually don't mind. I just, I do these things with a view to hoping that it's going to get through to someone and be worthwhile to someone somewhere down the line. So when I started this channel, it was with a view to getting through to someone. And right in the beginning, I almost walked away and thought, well, why am I wasting my time? But then I got some reaction back and I thought, okay, it's worth my while being here and helping some people. And now it's grown quite immensely, as you know. It's grown quite quickly, and now I will stick around. Mainly because of that, I will stick around. I mean, obviously. But yeah, it's just that if I do put like videos out and things like that, I like to know that they're not wasting my time, that somebody is interested in them, they're watching it, that sort of thing. Because obviously, you've got other things to do, like trading, go to the beach, go shopping, stuff like that. Yeah, no, totally. So yeah, and like this live show, and I started it, I didn't think I would ever have a live show. I mean, I thought, well, this is just too complicated for me. And then I started it, and it's great, and it's going. And like I say, we've got it twice a week at the moment. But like I say, I would like, before I add more live shows, to see that there's more interest in it, and that it's bigger. And then obviously I'll put more out there for you guys, and then we'll reach more people. The more people we can reach, the better. The more people get the message. Yeah. Rogers, I moved it into profit too, but you got away with it, Roger. I didn't. I guess I put it too close. Yeah, it's okay. At least it wasn't a loss, eh? I guess a profit's a profit at the end of the day. It's not the worst case scenario. It's just that you could have made so much more and you're like, oh, gee whiz, bummer. But okay, that's fine. Yeah. Now, live shows are great. I actually enjoy doing them. I have fun with you guys. And you know what I really enjoy? This may sound strange, but I really enjoy building this community. I like growing as a community. I like having people to talk to, and mainly because trading is a lonely game, guys. You have no idea. If you're only starting out, you're going to find out that trading is one of the loneliest games ever. And the reason for that is you really can't speak to anyone in your family about it. You can't speak to certain parts of your friends, don't understand what you're doing. It's nearly impossible to talk to people about it because they don't see it as a proper job. They don't understand what it's all about. Look, when you get to as old as me and you've done as many years as I have, and they've seen you succeed through it and whatnot, then of course they appreciate it and they don't question you on it. But when you're younger and you're starting out with something like this, most people will say, "What are you doing?" And it's very much like even the YouTube thing as well. Like, why are you doing that? Like, what are you doing? Why are you on YouTube? People don't get it. They don't understand. It's a funny thing, and you'll find that a lot in life. So if you're just getting into trading, understand that it is quite a lonely game, and there's no one to really speak to. So all through my trading career, I managed to have a lot of interesting friends who traded. We even had WhatsApp groups together and that sort of thing over the years. And one time I had a neighbor that was trading. That was great. We used to pop over to each other's houses, have coffee, sit on the trading platform together. That was brilliant. That was the best time. And then I moved away from that area, unfortunately. But that was fun. Yeah, it's good to have someone to talk to or to bounce it off. Really, it is. I mean, if you've got a friend that's trading, if you guys can find a way to trade together, it'll make it a hell of a lot better for you. I can tell you that now. If you guys can find a way to even sit in the same office or do it together, you'll find it'll just help your mindset a lot. It'll help you feel more comfortable because you'll make most of your mistakes because you're alone, and the fear will take you out most of the time because you're alone. The FOMO will take you out most of the time because you're alone. You'll be surprised how much more confidence you'll have if there's someone else around or someone with you. And this also helps me as well, even though I've been trading for such a long time. It helps my mind stay on top of it as well. By talking to you guys, by speaking to you guys, my mind stays awake to what's going on. And because if you just sit alone and you trade, you tend to forget things. You tend to make mistakes. You tend to do the things that you say you shouldn't do. But when you're talking to someone about it, it actually helps you stay on top of it. It really does. You'll be surprised. So find a way, if you can, to have people around you. Because for sure, your family's not going to understand it in the beginning. And even your friends, you go sit in the pub with your coal mining friends and factory-like friends and whatnot. They'll be like, really won't understand what you're doing. Or they'll want to do what you're doing, and everyone wants to know how to do it, and you'll sit spending your whole evening trying to explain to them how to trade, which is something that happens to me on a regular basis. And I don't mind. I love showing people how to trade, so it's okay. But doing it over a couple of beers can be quite dangerous, I suppose. I don't know. You know, I've been invited around to people's places to show them how to invest, for example. Friends, close friends, come around, Evelyn, tell us how to invest. Please help us here, show us how to invest our money and stuff like that. And then I'll sit and I'll spend the whole afternoon just showing them how to do it and whatnot. Yeah, that's what this game's all about. So there's two sides to it. There's either like, what are you doing? Or there's like, show us what to do. It's kind of like, It's so important. Keeps your mind alive. That's what it does at the end of the day. So, another couple of hours have passed. Can you believe it? I can't believe time flies so fast. I mean, I said it this morning. One of you guys actually commented on it as well. It's already February the 20th, 2025. Where did the time go? I mean, it's incredible. I mean, yesterday I had to go and reapply for one of my other licenses, and and I was at the office, and the guy said to the guy, it's just yesterday, man, that I got this one, so 5 years later. It's crazy. It's absolutely crazy how time flies. I mean, this month, I mean, it's gone. This year, we're 2 months into the year almost. It was just yesterday. So, yeah, time's really moving. So I was just sitting here now talking to you guys, and a couple of hours have just flown by. It's amazing how time flies. You blinked and you're in the mid-50s. Yeah, well, don't worry, you blink and, yeah, it goes by so quickly, eh? And just the other day I was 50 and now I'm touching the 60s. So, yeah. We're moving on, eh? Time goes by quickly. Kenneth, yeah, good to catch you there. With the time difference, I know that I'm trying to sort out the time difference as well. Here's the thing, and thanks, I appreciate you guys' time as well. The time difference, I'm trying to figure out the best way possible so that everybody can be on board, because not everybody that comes together here is on the same time zone. We're not all from America. We're not all from Europe. We're not all from Africa. We're not all from New Zealand. So there's a percentage around the world. I have looked at the percentages around the world, and I know that around 30% is from the US, and then there's Europe, and then Africa, and so on and so on. So I'm trying to mix it so that we can all get together at the best way possible. So Thursday, which is today, is on my side the 2:30 GMT +2 session, which is very close to the beginning of the US session or whatever. And what I'm going to do on Tuesday now, I'm going to first experiment, because I was at 9 in the morning and then at 10. Now I'm going to move it to 11 and just see if that works a little bit better for a few people, because I'm trying to pick up a few people that want to watch, that are in time zones that are just out of place. So I'm just trying to find a happy hour for everyone, so that we can all kind of fit in either on the Tuesday or on the Thursday. You don't have to fit in for both days. And then once we've figured that out 100% what works best, then I know the Thursday one is pretty good. Today's show is pretty good for most people. Tuesday's still a bit off. Once we get that sorted out and we start getting a lot more concurrent viewers on the shows, then we'll know what we need to do if we need to add shows in the future on other days, and what kind of times or time zones we need to put them out at. So, yeah. And in the USA, Kenneth, is even more difficult, because you're in frozen Ohio, USA at 9:18, and some of the other parts of the USA are at a completely different time. So West Coast, East Coast, sort of thing. So it makes it complicated. So I'm doing my best to try and make it more realistic for everyone. So, for example, now, like Kevin said, that would suit him better on Tuesday, the 11 o'clock for me, which is probably 9 o'clock for you. And you know what I mean? It's kind of, I'm trying to make it so that everyone can be on board. So then we can have, in the future, when we got more viewers, we can have a couple of shows maybe on a one time zone and a couple of shows on the other time zone, and just work it out that way, work it out in the best way possible. So I'm just trying to give everybody the opportunity to be comfortable watching the show and not having to get up at 4 a.m. or go to bed at midnight. So we'll try Tuesday out at 11. So this Tuesday will be at 11 o'clock on my side, 11 GMT plus 2. If you're not sure what GMT plus 2 is, just go on the Google and just check time zones, okay? And then, you get normal Greenwich Meridian time, which is basically your 0, 2 hours behind. So just kind of work on that. GMT plus 2 is my time. So then you'll know, you can work out what your time is from that. Okay, wherever you are in the world, because I can't say it's this time here, that time there, that time there, because as I say to you, we've got such a diverse amount of people here on the show coming from different places. I love it. You guys are from all over the world, which is fantastic. You can't believe you're speaking to people from all over the world: Singapore, New Zealand, Australia, America, Scotland, UK, Germany. You're all over, Switzerland. So now we've got to try and work that out. Okay. I've been trying to wear myself out for 60 years, dude. Hasn't happened yet. Kevin, I'm also leaving now. I appreciate you guys, and thanks for coming on the show. It's been great. It is time for me to go, and I've got my dogs waiting for me as well, the little beagles. They want to get fed. So, yeah, it's feed a beagle time. Guys, thanks for being here. Thanks for being on the show. So on the next live show, so it's Thursday today, so I'll see you guys on Tuesday at 11 GMT plus 2. And I will try and make that video over the weekend for you guys as well. So we do an analysis of the week. I can't get my words out. And of course, I'll have, as usual, the normal members video out every morning. If you've got questions, leave them in the comments. I'll try and answer them on the members videos in the mornings, if not on the live shows, or I'll sometimes try and include it on the weekly analysis video as well. We'll try and put answers in there for you guys, but I'll try and get your answers out to you as best as possible. But guys, thanks so much. Thanks for watching. Until the next one, cheers, ciao,